we are now joined by James Buckley, who's the fund manager at Bearing Asset Management. James, great to have you with us this morning. First, let's start the discussion by getting a word on what you're expecting from the United States in the coming months. Do you think that a QE3 is now likely with Europe stabilizing?
I think the more important issue for the likelihood of QE3 in the US is the employment and housing markets in the States, and both of those are showing some grounds for optimism, particularly the employment market, where the data series clearly has been encouraging, and even the housing market appears to be bottoming. So taken together with a slightly better tone coming out of Europe would support the theses that full-scale QE3 in the US has probably moved a little further down the agenda.
James, what's your call on euro versus the dollar? Is it time to go long on the euro?
I think the trading rate has been established for some time now around the 130 level, roughly, will probably remain intact. The euro hasn't been as weak as most forecasters expected. That partially reflects some easing of the sovereign bond concerns. Obviously the US itself has some issues and an election later this year, so I think it all points to probably fairly subdued movements in the euro-dollar rate.
Right, James, now would like to talk about crude prices as well in a bit more detail, especially given that crude has been on an absolute boil. Do you think that crude could be the story for 2012?
Well, it's certainly moving front and centre of investors' attention at the moment, where the crude price is now back at around the level it was at its peak last year during the Arab Spring situation. Gasoline prices $4 a gallon in the US now. So yes, I think it will be increasingly and very much on investors' minds, and may act as a headwind for the US consumer.
James, which asset classes are you bullish and bearish on in 2011? Is it debt, equities, commodities or currencies?
Well, in general, I'm of the view that the global economy will grow at around trend this year, or close to trend. Therefore, you want to be in the asset classes that give exposure to that, which broadly speaking, equities and commodities and currencies related to those asset classes relative to debt or cash. So I'm still broadly speaking constructive on equities.
And how are you viewing the latest developments that we've seen in Greece? Do you think with the second bailout the issue has been resolved, or it's just postponed?
I think it's purely been postponed. The target of getting debt to 120% of GDP by 2020 looks extremely ambitious, given the impact on the Greek economy of the forthcoming austerity measures, many of which have, of course, still to be implemented. Extremely high unemployment there. It looks to me almost increasingly an inevitability that the Greek political and economic infrastructure won't be able to cope with this austerity package.
James, it appears that the EU leaders are worried about how a possible Greece bailout could lead to a systematic failure. Do you agree?
Well, they've been working very hard, clearly, to try and ring-fence Greece and prevent contagion across to the other troubled economies, with some degree of success. If you look at the bond yields in obviously Italy and Spain have fallen quite sharply since December. Ireland is proving to be an export-driven recovery. Portugal remains in a lot of difficulties, although even there the bond yield has fallen back from 16% to 12%, which is clearly still unsustainably high. So they have had some apparent success, but there's a long way to travel on this road still, and some real difficulties ahead.
Right. And James, what does the current scenario mean for the status of the European Union?
I'm very much in the camp that thinks the EU will remain intact, albeit probably with one less member than it has currently, that member obviously being Greece. I think the political will is there. The mechanisms such as the LTRO are being put in place, and I think there has been some success, as I say, in preventing and in sort of ring-fencing Greece and preventing a disorderly default. But there is a lot of uncertainty still, particularly regarding Portugal, and a lot of work ahead for the European Union.